Feroze, Radhika is being very charitable. She's saying this is prudent, fiscal prudence, and the bond markets are happy. But hey, I mean, I think this being election year, people were hoping that maybe on the personal income tax side, we'll get some relief here and there. But I guess nothing for now.
Yes, Ravi. Good afternoon. Like you rightly pointed out, there's always a certain expectation. Investors or even taxpayers don't use the existing provisions which have been given, but they still want something new. So I personally think that expectation was not meritorious because there's a clear consistency between what this government wants budget after budget. If it is looking at simplifying and creates a new method of direct tax, changing amendments or making amendments to the previous method will not be the name of the game. Or if you look at what happened last time, was just the standard deduction getting included in the new method. Which was there in the old method. So at best, somebody could have expected a marginal change in that or an increase in the standard deduction. Nothing else to the old method will ever happen, in my opinion, if there is consistency, which is what this government has displayed. Second, I personally think this is a budget where on the key ticket items, which are the economy items, it's undercommit, over deliver. If you look at the tax collection last year, tax revenues grew by 15%. This time you're projecting 12%. You've already collected 77% of your budgeted revenues. So it is undercommit, over deliver, to my mind, on the fiscal side, or on the revenue side, and in turn expense side. And there comes the fiscal deficit. So I think undercommit, over deliver on this key ticket item is there. Of course, disinvestments could have been better, but that's the theme. And consistency and simplification has been the mantra. And I'm glad that the theme continues: simplification and consistency of making sure it becomes easy for a person to file his taxes, pre-filled forms, 93 days of refunds coming down to 10 days. These are all miraculous achievements. These are it is not easy to make sure that you simplify the life of a taxpayer, and that's more important than 5,000-10,000 rupees here or there for a taxpayer in the form of subs.
Feroze, just come in on this, and how are you looking at the fixed income reaction, the bond side reaction today, and how are you gauging this?
Yes, Ruby, I think this is a very, very important thing, not just from a bond standpoint, but from an equity standpoint as well. If the government borrowing is significantly lower next year, if you look at the number, there's almost a 1 lakh crore lesser expected to be borrowed, a little over 1 lakh crore by the government. That brings in immense amount of softness in the long end of the yield curve, which is better than a rate cut for sure, because rate cuts actually tamper with the short end of the yield curve. Now, coming back to trying to simplify this, if interest rates come down, the price to earning multiples of equity have a serious correlation with them. If you backtest 22 years, 0.5% reduction in the yield on the long end side creates 1 to 2p extra on the market valuation from a fair market standpoint, because every business gets valued better because businesses are nothing but discounted cash flows. Equity will have a large impact, and the fact that this happened, the market solidified its base. If you look at October to January, market has moved from 18,850 on the expiry of 26th October to 21,700. So I was a little worried that you're skating on thin ice. Short term, if you have seen 15% move, an interim budget like that has solidified that level by a reasonable margin. So that's point one. Point two, the housing push will also get a great momentum, because the borrowing cost generally on the home loan sides are linked to the long end of the yield curve. And that will propel demand for housing. And then from this side, you push housing creation. Here you push demand because of lower interest rates. I think it's a double benefit from a consumer side.
But Feroze, I mean, how would you see it from the mutual fund side, from the equity investors' point of view? How should this be read, given that last year it was all about capex companies, industrials, PSU stocks, and of course a lot of the PSU funds that were launched as well?
Yes, Ruby, if you look at that, like 11.1 lakh crore is going to be spent, which is 11.1% incidentally greater than last year. But if you look at how this has been poised over this financial year, till 7 months, the government had hardly penetrated into its fiscal deficit by only 44% till October end, as far as I remember the number correctly. And the long-term averages by October, the governments used to penetrate almost 73%. So irrespective of the capital expenditure number on the total side has not gone up dramatically, which is 11%, definitely significantly lower on a lower base of 30 odd percent last time around. But I think there is a lot of expenditure still happening as we speak. So I think that this number is sensible. Given the fact that it's not been spent already, the economic impact of the multiplier of capital expenditure is definitely higher. Housing is also very high because there are a lot of ancillary businesses which take benefit out of housing, capital expenditure, infrastructure expenditure. I think this should be sufficient to create the GDP promised. And in fact, we are looking at a positive surprise on the GDP number at the end of the year.
Feroze, what would you say? I mean, for you, what are the salient features of this budget, or if you're saying any indications, any cues for the future for July, then what would you pick out?
I think, like you rightly pointed out, Surabhi, there's a 4-5 dimensional matrix which needs to be solved for a capital gain, for a person to assess what's the exact capital gain liability, STT paid, non-STT paid, which kind of asset, what's my domicile, what tenure I've held it for. So that simplification, I think, should happen sooner than later. That's point one. Point two, from an asset class standpoint, which I think is the most critical from an investor lens, I think that the 10-year yields can come down to almost about 6.5, 6.4% by the time the next budget will be announced. So that's a great push. Second, I personally think that this kind of simplicity is definitely liked by the foreign investors. So if you look at how the foreign investors have behaved in the last few months or even a year, they have started participating into India, not just from the top 100 stocks. So if you look at the kind of participation in the NSE 500 stocks, in spite of they being richly valued, the participation is enormous. I think that will get boosted. So the small cap and the mid cap outperforming the large cap, I think will continue for a few more months. Unlike the popular belief. And September, October, people went very bearish on small caps and funds managers stopped taking money. From there on, it has outperformed 10-11%. I think next 3-4 months, NSE small cap 250 has potential to outperform by 4-5%. So this, I think, is the more important bit from an investor lens.
Feroze, from the point of view of our investments, looking at our wealth, at our money, what is the thought that you would leave with as we wrap up on interim budget 24?
Surabhi, I think our strength in the world has been solidified further. We are one of those economies which are at lower interest rates than the historical averages, lower inflation than the historical averages. This budget posed a threat if the fiscal deficit was not controlled. I think we have solidified our position on that. That's a great news. Second, I think both the asset classes are going to get a benefit out of it. Buoyancy in equity and rally in debt, and in inter-segment of the equity markets, I think small caps and portfolios have done well, because that's when the broader market does well, is when an investor portfolio does well. That has also got protected. So both assets protected and portfolios of stocks and bonds protected for individual investors, which I think is a great step. And it was a true to label vote on account budget and simple.
Absolutely. So, well, that is, I guess, for today. Now we wait for more policy announcements after the general elections. Thank you very much.